Welcome to the B.F. Anderson Technical Report for March the 18th. The human mind, the brain, it's like a computer. Data comes in through basically video, which is about 80% of the data that comes into your brain. And then it comes out in the form of decisions. So as investment advisors using quantitative analysis, it's very important that we understand our mathematical skills. Because what we're trying to do is basically use math as a way not to use our brain. Because the brain is actually your greatest enemy, because even though it's a computer, it has a major flaw. And that flaw is emotions. And as a result, we have biases. So just something to think about and be aware of. Also, I thought this was an interesting article. It says young investors plan to spend almost half of their stimulus checks on stocks. That's amazing. So we're starting to see the millennials come around as we knew they would. Lots of money coming our way, and we want to invest in such a way where that money flows our way. So here is the NASDAQ. As you can see here, this is using the 25 and the 50-day. Seeing some weakness here in the NASDAQ. The major problem with the market right now has been the NASDAQ, but also it has also been the hottest area. So a normal pullback is not to be unexpected. So here we have a different reading on it where we're looking for a volume increase, where we're seeing the buyers really come into this particular situation. So the NASDAQ on a weekly basis, the 35-week moving average, as we stay above the 35-week moving average, we continue to stay in a bullish trend. Now, on a daily basis, where we're using the 10-day moving average and the 50-day moving average, and we're looking at volume basically on a daily basis, you can see here that we had a big down volume day, then we had a big up volume day, but we really haven't seen any days where we've seen an increase above those levels. So, as we look at the other indexes, which is like the S&P mid-cap, you can see here the trend is pretty much stable. It's above the 10-day, continuing to stay strong. So it's mainly the middle-sized companies. Now here's the New York Stock Exchange, which are your larger stocks, mainly your banks and your oil companies. It continues to stay in a very powerful uptrend, but we're just not seeing that offsetting volumes. So in other words, 1, 2, 3, 4, 5, 6, 7, 8, 9 days ago had an exceptionally down volume day that I would like to see volume come in on the buy side to offset that. But we're getting there. It just takes time. Now here's the small caps. Again, you can see the same trend, how we have the same volume problem, but the trend is good. The small caps have been outperforming this market. Here's the S&P large caps. This is the S&P 500. Again, volume's not there, but we are seeing an uptrend. Now, on the aggression index, we're seeing a little bit of improvement there on a daily basis. That came down, broke the 50-day, has rallied back up a little bit. Now, remember, we're doing a ratio here of the technology stocks compared to the consumer staple stocks, which shows you aggression. Well, we saw a diminishing aggression. Now we're seeing a pickup. Now, on the actual indicator, we're above the 40-week moving average, and the aggression index on a weekly basis has turned up. Now, on interest rates, this is interesting. We got to a 1.64% yield on the 10-year Treasury, which is the highest reading we've seen in quite a while. At the same time, the price of oil has somewhat stabilized and flattened out around $64, $65 a barrel. Then on financial stocks, they've been in an uptrend along with interest rates, continue to look positive. Now, on new lows, no problem. This is where pretty much around February the 15th in that area, we started a correction and then it culminated in a bunch of new lows. Now we're starting to see stabilization again. This is a good sign. Now on the put-call ratio, again, we're still in extreme greed. We could potentially stay there for a long time. Just remember, though, that you want to be somewhat of a contrarian. You want to be greedy when others are fearful, and fearful when others are greedy. And right now, there's a lot of greed. On the volatility index, breaking to a new low. So we're actually seeing the volatility index break below 20, which is very positive because it means that the less volatility in the marketplace, the more attractive stocks become. Now, unemployment improving. definitely improving. You can see here every time we get a peak in unemployment, comes down, we see the market take off. We get a peak in unemployment, starts to improve, market takes off. Here is something I thought was very interesting. This is the Nikkei average. This is Japan. Now, could you imagine being in Japan, and this goes back all the way to 1990. Now, the Nikkei peaked in 1981, so it's been 30 plus years of a difficult market and economy. Now, it has a lot to do with demographics, and losing World War II has a lot to do with it as well. But this particular index, which is the Nikkei average, has gone nowhere for 30 plus years. But look at it, it's breaking out. I mean, this is something different. This is a positive development. But, you know, the thing to think about here, how would you like to be living in Japan and trying to retire on investing in their stock market? It would have been next to impossible. Now, here's a ratio that I went ahead and put together. This is comparing the 7 to 10-year Treasury bond compared to the S&P 500. As you can see, as the line goes down, bonds are doing worse than stocks. Well, it just recently hit a new low, this ratio. So, again, stocks are outperforming bonds. Now, a couple of particular indexes that look interesting. Here's the Dow Jones U.S. Home Construction Index hitting a new high. Here is the Leisure and Entertainment Index hitting a new high on a weekly basis. Here's financials. This is the banks. You want strong banks, and they're hitting new highs. So this is definitely a bull market. Now on inflation, Consumer Price Index, we can see here that really the rate of change has not been dramatic. And for the last century, the rate of change has usually been about 0.6% to 2.9%. The Federal Reserve has stated basically that they're willing to tolerate 2%, and right now things are just not accelerating. So inflation is not a problem at this time. Dow Jones sector Titan 30 index. This is basic resources, things like concrete, starting to break out. Here we have the basic materials, similar story, sideways for an extended period of time, many, many years, finally breaking out. This is very bullish. It means the economy is really improving here. Now, this is the only problem, the only fly in the ointment. This is the QQQ, which is the technology stocks compared to the S&P 500. You can see here they pretty much have peaked. We've broken down below that base. I would just continue to be very cautious around technology, especially growth stocks as well. Now, here are the top 5. Here's Cimarex Energy. Now, you're going to notice here, just like the basic materials indexes and the various indexes we're looking at, energy is really starting to outperform. So here is Cimarex. Now, it has pulled back below the 10-day, but continues to be in a very powerful uptrend. This is Tapestry. Now, this is a company involved in consumer products, mainly luxury purses. Continues to stay in an uptrend. Been on our list for a good while. We do own this stock. Here's SM Energy. Again, this is another company that's drilling in the Permian Basin in West Texas, which is a very, very good area, being called basically a 100-year basin, very similar to Saudi Arabia. So here we have an uptrend. Also Macy's here. This is a new one, broadline retailer. The thing that's interesting here is look at this gap up, major gap up, then pulled back, consolidated, then we're getting another gap up here. This is probably around the time of the vaccine being announced, but the stock is continuing to attract buyers on very heavy volume. Here's another energy stock, Diamondback Energy, continues to be in an uptrend. We're seeing a little bit of consolidation in these stocks, but the pattern continues to be positive. So if you have any questions, let me know. Thank you very much.